All right, welcome back. So the pre-open rates are a minute out. Anuj has hopped across from the next door studios for a quick trade setup. Anuj, what are you watching?
Yeah, Prashant, I was just listening to you as well, and what's clearly standing out is it's happened 3 or 4 times. The US market's reaction on the day and the next day, clearly it's and it's almost playing out to the T. The secondary reaction becomes more important. The US bond yield back to 4 and the dollar index at 113. Some escalation of Russia-Ukraine, but my sense is that the Indian market is still showing signs of outperformance, and today could be as good a day as any to see that play out in terms of buy on dips. The first support at the well-documented number that we've been mentioning, the 200-day moving average, which is somewhere around 17,000. But the Nifty has bounced thrice from 16,950, so that's obviously your biggest support. And the closer you get to 16,950, the bigger is your risk reward. In terms of resistance on the upside, I think 17,350, this is a level which the bears just somehow defended on Friday, because above it, you have a straight move to 17,500. And the Bank Nifty is clearly a much stronger index. And over there, you see it's still in the 20 and 50-day moving average trajectory, while the Nifty is around the 200-day moving average. So I think the Bank Nifty's big support is 38,400, 500. Again, expiry day low. That's where you saw a lot of support. And on the upside, 39,570 is some resistance. Above that, I think it's a clear move to 40,000 on the Bank Nifty. So stronger index. The only component here, or the only thing to watch here, would be how does HDFC Bank react after the numbers, because a lot of pre-positioning happened on Friday. So that could be an important thing to track.
Okay, Anuj, thanks a lot for that. But resilience, right? That's what the market is showcasing right now. Even in pre-opening, if you look at it, the Nifty is down but not out, about 70 points lower. HDFC Bank, Bajaj Auto are stocks that are holding up in the green. On the downside, a lot of FMCG names coming out with numbers this week. Ahead of that, some trepidation, ITC, HUL, Asian Paints, all a tad bit in the red. And take a look at names like Tata Elxsi and how they are reacting to their numbers. Weakness over there. Big margin fall for Tata Elxsi. 300 basis points fall in their margins. And that stock is under a bit of pressure. But Prakash Diwan is back with us to talk about some numbers. Prakash, I wanted your thoughts on how one should approach Bajaj Auto now. Because the numbers were not too bad, but management commentary was a bit cautious. And there is a repeated delay in the launch of their electric three-wheelers, which is a bit of a concern. Your thoughts on the stock?
So, Sonia, I do accept the fact that the numbers, while they're probably, on a Q-on-Q basis, slightly better, but it doesn't seem to give any indication that the winter is over for them. I think it's very clearly a little bit of an issue with their exports that's still worrisome. And the other thing is the domestic demand, where they don't have too much of market share, but even whatever 27% market share is decent enough for them to probably offset all these export losses. But I mean, dip in exports, but that's also not kind of revving up. Remember, Bajaj Auto will need a little bit of that trigger. I mean, I have faith in the fact that the companies always bounce back in adverse times very, very convincingly. But you'll probably need some trigger, whether it's electric vehicle launch or whether it's a revival in exports. But things do look a bit worrisome in terms of this thing. So you'll probably have a time correction, if not a price correction, because it's already corrected from last quarter 4,000 levels to about 3,500. So I do expect this quarter to be muted for them in that sense from a price volume action. But it'll probably be range bound for some more time till some new triggers emerge.
Okay, all right. Prakash, by the way, the rupee has just opened up, and it's opened up more or less flattish. And, stability in the currency is something that the bulls as well would be looking forward to. Prakash, before we let you go, your view on Shree Cement. The big outperformer continues to disappoint. Quality name, things will improve in the second half of this year. But what do you make of the stock at around 21,000?
So, Nigel, I hope this is, though it is the first cement play to have announced earnings, it's not a trend that you would see in other names as well. Because in the case of Shree, what's again a little bit of a concern is the lower EBITDA that they ended up clocking. I mean, which shouldn't have been such an issue, but I think cost pressures continue to be a big negative. And here, it's not just the cost, but it's the product mix. They've not sold value-added products as much. Now, whether that goes for the industry or not, I don't know. And we are getting into a regime where all larger players, including Shree, are going to focus on organically building their capacities. Now, if they take their eyes off the market, and if there is some sort of a reduction in margins, it will impact most of the names. Sri is, of course, a wonderful business, always been very richly valued, and you could probably see opportunities to buy in if at lower levels. But I still like some other names there, given valuation comforts. I would look at those rather than Sri at this point. But I hope it doesn't percolate to the other names as well in terms of this trend of lower margins and in spite of higher revenues, not making the cut on the profit side.
All right, Prakash, thank you very much. Great speaking with you, and it's a pleasure. I mean, let's just take a look at the pre-open rates. The Nifty and HDFC Bank is starting about 1.33% lower. So as Anuj was pointing out, maybe pre-positioning getting reversed as we start this morning, but we'll see. And Tata Elxsi is another one, which maybe you want to just take a quick look at. And that's disappointed on earnings after almost 2 years, 5.5 lower. It's perhaps the most expensive IT services. Some say it's not an IT services company, but it's a IT company, 5.5 lower. So that's sharply lower. So those are big movers which are coming through. And the index itself is down 70 or 80 points or so. Sonia.
Absolutely. So you know what? Let's take a quick check on what's happening in the world of the FMCG space. The Retailers Association of India data showed that September retail sales are up 17%. And QSR is up 27% versus last year. So if you compare to the pre-pandemic level, there's been a 21% rise in retail and a near 50% rise in QSR sales. To discuss this space and these stocks particularly, we're joined by Shirish Pardeshi, the FMCG analyst at Centrum. Shirish, good morning and thanks for joining in. In your coverage universe, which are the companies that could be big beneficiaries of this revival in sales? And what is the expectation in this from this earnings season?
I think there are two things which are coming up. First, the data shows that the disposable income for the millennials is going up and people have pressed on time. So service delivery is one of the factors which most of the companies are working. And that's really showing in terms of the numbers. So our expectation is that most of the companies should report higher of say 25 to 30% growth. Obviously, the store expansion has been taking pace, but then we are expecting these same store sales growth should inch up to maybe about 5 to 7%. So given that, to sum it up, the undercurrent demand is very strong and the aggregators and delivery system, which is tech-led, is really picking up.
Okay, hi Shirish. Noted that you're expecting a good growth of 25%, if I got that number correct, which is a very healthy number. But what about valuations? Some of these valuations are going through the roof. Which one is relatively better according to you?
I think what you have to consider is that if you build up the number, the store expansion is really becoming very aggressive. Whether you pick up any of the name in the pizza category or even chicken category or even the burger category. I think what we have understood, at least the pizza category's penetration in terms of coverage of towns is much higher than the burgers and this space. What is more important is that right now you look at the valuation in terms of the numbers which has been presented to us. However, my strong feeling is that the earning momentum will be purely driven by the numbers and there will be upgrade which will follow. So there are two things which I have said. You can expect about 5 to 7% store expansion. So when you extrapolate these thoughts, I think today when you look at and the numbers suggest that whichever categories you look at, average 50 to 55% penetration is still coming from top 8 cities. Now, once this momentum picks up in tier 1 and tier 2 cities, I think that's where there is a long runway for the store expansion.
Okay.
So I will not get into the valuation per se, but I think it is all the numbers which we have
All right, Shirish, we're actually having some issues with your audio, so we'll try and sort of wrap up this conversation. But thanks a lot for staying with CNBC TV18. Let's just quickly get the Nifty up on board now. The Nifty is not too bad at all. Just a 40-point downtick is what we're seeing. A lot of stocks in the green. Bajaj Auto is up almost about 0.2%. Infosys is in the green right now. Federal Bank, after a good set of numbers, is up in the green. And then on the flip side, you have names like Tata Elxsi, Shree Cements that are under a bit of pressure at the moment. But let's get to Mitesh and get some calls in. Mitesh, what would the big call be at 9:10 this morning?
I think Federal Bank, I would have wanted it to buy it and decline. So let's say if you get it around 130 also, enter with a stop at 127 for targets of 136.
Okay, all right. Well, thanks a lot for that, Mitesh. Well, let's focus on a couple of names then. HDFC, obviously, that's in focus. But I'm looking at a note coming in from Nuvama. And they have given some bit of clarifications because now the sheet will be coming to terms with the merger. So one of the two components will make its way out of the Nifty in the temporary period. So they're giving us some index implications as they see it. They say HDFC Limited and not HDFC Bank will get excluded from the Nifty. The weightage for the consolidated entity will definitely increase for HDFC Bank, that is, because currently, in fact, they have a large weightage. Once HDFC moves out, and then you'll have the merged entity, free float will increase. So obviously, the weightage as well will increase. They say HDFC Limited could get impacted, and that's why there would be some passive outflows. So according to their tracker, they equate close to around $1.5 billion of outflows whenever it does get excluded. And the big question is, if HDFC Limited, the big boy, is going to be going out, who could potentially go ahead and replace it? In order, they've given that. Pidilite, Ambuja Cements could make a comeback, Tata Power as well as SRF. So that's the note coming in from Nuvama. I just thought we'll highlight it for our viewers.
Okay, very interesting over there. But we're also watching out for some earnings reactions and some brokerage views. Bajaj Auto, the earnings were good. They were decent set of earnings, but a lot of brokerages are very cautious after the management's commentary itself was a bit on the cautious side. Brokerages have cut their target price and earnings estimates. The management says that they expect single-digit retail growth for the festive season for the industry. They also say that Q3 exports are likely to be soft yet again on a year-on-year basis. And as we know, there have been repeated delays in the launch of the electric three-wheelers, and that has now once again been delayed from September 2022 to March 2023. Now, let's take a look at what brokerages are saying. Nomura has a neutral, CLSA outperforms, Citi sell. A lot of them have cut their target prices. Now the range is anywhere between 4,000 to about 4,100. UBS has a neutral, Goldman Sachs has a buy, while MK has maintained their hold with a target price of 4,100. So, we'll of course be talking to the management in a bit. But for now, commentary that they've given in the call is cautious.
Global, 50% is global, and global, especially some of the markets are doing badly. And, they've been candid enough to kind of talk about that with us. The other one, I think, is Z. I just want to make a quick mention. Shareholders on Friday approved that merger, between Z and Sony. And this is incremental. This is not a game changer, but it's moving forward. We had that CCI approval which came through, and now we've got this one. There are more approvals which have got to be got. The important one, of course, is from the Ministry of INB Ministry, Information and Broadcasting, and I think there will be another approval from NCLT, which perhaps may be needed. But the process is moving forward on Z at about 270 or so. Let's revisit Tata Elxsi for a quick bit, which is likely to be one of the stocks of the day on the downside, perhaps. Rima, over to you.
Thanks so much for that. So growth for Tata Elxsi has come in softer than what the street was anticipating. Revenue growth on a year-on-year basis stands at 28%. Now, this compares with close to a 40% growth that the company had about 6 quarters ago. In fact, for the last 5 quarters, the company's growth rate has been in excess of 30%, and it has been steadily declining. And this quarter, it's dropped below the 30% mark. Constant currency revenue growth on a quarter-on-quarter basis, too, has now come in at 4.7%, which compares with a rough average of 7% over the last 4 quarters. The company said growth rates were impacted by supply-side challenges. Margins, too, for the company have seen a sharp drop up, 310 basis points lower on a sequential basis, again, below the 30% mark. The company has hired very aggressively because, as they said, they were impacted by supply-side challenges. So the net addition this quarter has been the highest number of employees that the company has added in a single quarter. It impacted utilization realizations and therefore the margins. Where did the companies see pressure? In their media and communication verticals, both in US and Europe, particularly OTT players. On Europe, the management commentary in the conference call was that there is a slowness in new opportunities. No existing deals, cancellations or deferrals, but new opportunities are a bit slower. Customers are becoming more cautious and the deal closure times are also going up in Europe. The problem is this stock has been a rank outperformer, 45% up this year at a time when the rest of the IT sector have seen big stock plunges and valuations are roughly at 65 times forward multiple. So the margin of error is very low when it comes to Tata Elxsi. Back to you.
Okay, that's a photo finish. Thanks a lot, Rima, for that. So 6 seconds left for the opening bell this morning, first day of the week. And looks like it's going to start on the back foot, but not as much. So the Nifty is down just about 30 odd points. Big resilience compared to what we saw in the global markets. And I think that was on expected lines. The Bank Nifty as well is now, it's actually in the green. Courtesy HDFC Bank and the strong numbers. So the support has come from HDFC Bank this morning. You have Infosys, HUL. HUL comes out with numbers this week. Ahead of that, the stock is in the green. Bajaj Auto is your biggest Nifty gainer on the back of a good set of numbers coming through. You have Tata Consumer Products that's up in the green. So that one as well comes out with numbers this week. But the support largely is coming in from Axis Bank, HDFC Bank, Infosys and HDFC, all four in the green right now. And that's taken the Nifty into the green line as well. So very strong resilience coming through. In fact, on the downside, Reliance is the only one that's dragging its feet a bit, comes out with numbers on Friday. There's TCS as well. Post its numbers, TCS has been sluggish. HDFC Life, M&M, SBI Life and Hindalco are a couple of other stocks that are in the red. Tata Steel is in the red as well. And then a couple of other FMCG names like Titan, not doing too much, but just a bit of a reddish tinge over there. Otherwise, it's a good market. It's a good opening, you'd have to say. The Bank Nifty is now surging away. Courtesy HDFC Bank. You have Axis Bank and HDFC, all three up anywhere between 0.5 to 1.5%. So I'd say given the global context, it's a good opening. And now Bank Nifty really supporting the market this morning.
Well, that's right, Sonia. The point that we made earlier as well, maybe the street preempted, that there was going to be a weak handover, and that's why we were lower. So closer on 160 points low on Friday. And for the time being, the Nifty is moved into the green. What more evidence you require about outperformance? The screen is telling you that. In terms of stocks that are moving around, Tata Elxsi, well, that one's reacting to its numbers. So down 5%. Oberoi Realty as well has taken a bit of a knock. Post its numbers is down closer around 2%. Just Style, there was good top-line growth out there, though the margins continue to remain under pressure. But for the time being, I think the street has launched on to the top-line growth. The stock is up closer around 3%. Avenue Supermarts, well, Mangalam told us that there was a bit of a margin miss out there. So let's see how that stock is reacting in trade. Well, it's down closer around 1% or thereabouts. And Suntech, you had an operational update as well. Did it come in there? Initially, the stock opened up with a gain of closer around 1% or thereabouts. Let's see what that stock is doing as we speak. I think pretty much flattish. Now, in fact, it's down closer around 0.5%. Federal Bank came out with its set of numbers. Look pretty good. The stock, in fact, is still holding up in the green with a gain of around 1%. So pretty much flattish on the Nifty, Prashant. And that's heartening to see. I mean,
this is incredible, right? Once again. 2-3% cuts on Wall Street the previous day, and the market opens up in the green. Just amazing. So 17,170 now on the index, 17,300, 17,400. Those are broadly levels you want to keep in mind on the upside. And on the downside, 16,950, basically the lows for the last so many days. The market goes exactly to that level and then kind of bounces. Happened 3 out of the last 5 trading sessions now. Just a few other names before we kind of bring in our market master this morning. BLS, that is the travel facilitation company, a visa processing company rather, that's up 5-6%. I think there was a news report with some investor sort of getting in. Shankar Sharma, I think.
It's a disclosure post-market on Friday.
Yeah. So that's another one. So big volumes as well on that one. There is Just Dial, which is up 4%. It's coming up on volumes, 592. Shemaru is up 4%. I'm just only mentioning these because they've backed by volumes. Otherwise, not really. Tata Elxsi is down a full 7% now. So 7884 on Tata Elxsi. It's the top traded name as well. So it's going down on volumes. But will it stay down is the question. Shree Cements is down 4%. I think Nigel mentioned that. JTL Infra is coming up on my screen. This is down 11%, 254 on pretty large volumes. Vedanta, India Cements and Oberoi Realty. Oberoi Realty is down 4.25%. So that's a big cut on volumes. 862 on Oberoi Realty at this point in time. Varun Beverages you can throw in there as well. That's down about 2%. 1,004, 1,005 on that one. Manish Chaudhary is our market master of the day. He's Asian equity strategist, equity cash, Asia Pacific at BNP Paribas. Manish, great to have you with us here. Thank you very much. I mean, you know, the message from Wall Street to the rest of the world seems to be, you know, you're on your own. Maybe not from Wall Street, but from the Fed. You know, we will do what it takes to cool inflation here, collateral damage notwithstanding, but there is very, very little in terms of damage here. At least on an index level, the outperformance is pretty stark, Manishi. Will that continue, in your opinion?
For the time being, investors are focused on those markets which provide some degree of growth assurance. You know, and that can be economic growth, or that can be corporate earnings growth. India, I think, fits into that description, and that is why you're seeing it's not that the India is doing too well. You know, if you look at it on dollar-adjusted basis, it is actually...
Manishi, you know, what we'll do is we're having a little bit of trouble with the connection. We'll try and fix it. We'll come right back to you in terms of what's going on. Sonia, what else are you picking up? I mean, we're down 20 points now. I mean, you know, started lower, went into the green and down slightly.
Absolutely. And you know what? I think the bulls have it this morning, right? At least so far. Bajaj Auto is actually picking up a bit of pace now. So 1.5% higher on Bajaj Auto. The numbers were good, but the management commentary was a bit cautious. But the street likes the fact that there are some raw material tailwinds as well. And a lot of people perhaps believe that the worst of the export problem perhaps could be behind, but we'll get to know more.
Max is another one I want to just highlight because Max saw that big move on Friday, right? Last hour. From the high was 759, the low was 665. There was that fine which came through in the last hour of trade. Max Financial is what I'm talking about. And it recovered. I mean, from the lows of 665, it ended finally at 714. This morning, it's starting slightly higher at about 720, 722 or so. So, you know, although over the weekend, the quantum of the fine, I think the IRDA order, that's gone up. But, you know, it's not material from a larger point of view, larger scheme of things. The street was worried whether there'll be more, not just the fine, but some kind of strictures, restrictions. But there is none of that, apparently. 721. It's still far below where it started on Friday. So that's another one to watch.
I just also wanted to point out Federal Bank is at a fresh 52-week high this morning. So, you know, that bank has had a very strong run ever since its numbers came through. I mean, this year, Federal Bank, not Central Bank, Federal Bank is the one I'm talking about. It's at a 52-week high of 130 rupees. This year, Federal Bank is up almost about 55%. So things are looking good. Some of these banks, of course, have been huge outperformers, and that trend continues.
Well, that's right. Just take a look at Oberoi Realty, though. The stock opened up with a cut of around 1% odd, but now it's down a good 5% as we speak. So just keep an eye out on that one. Well, it's moved low and it's moving low on large volumes. India Cements. That's the other one. There were first indications that the company is looking at deleveraging their balance sheet when they sold that limestone block, you know, the subsidiary that had that limestone block, and they got in close to around 600 crores, all inclusive. From that peak of around 280 rupees, the stock has seen a massive correction, close to around 20% correction in a matter of close to around 5 days. You know, so the street clearly is baking in something larger to happen out there, but that's not happened. And for the time being, after the big outperformance, it appears there is some money getting taken off the table as well. So just keep an eye out on that one. And, you know, Shree Cements is on a cost front, that's one of the lowest producers of cement. When Shree Cement disappoints, you know, that is not very, very great news for the other cement names as well. So we're looking at a read through. We'll have the management with us, by the way, in the next 15-20 minutes or so. So we'll hear what Mr. Bangur has to say as well.
Absolutely. You know, Nigel, you know, remember TRF, right? The Tata Group company, that merger which was announced, and the stock had seen a big run up. What a come down. I mean, it's basically back at the pre-rally levels, 166, 167 on TRF, which is with the name I'm talking about. And you look at another one would be Credit Access, which is down about, what, 6.5%. That's a microfinance company, 913 on Credit Access. And that's a big red bar. Volumes are nothing to write home about, but you got a fair bit moving around at this point in time. On the upside, is there anything new? Not really. I mean, you know, BLS, Shamaru, more of the same. You know, there's RK Forging, which is up about 2% or so, but still picking up in terms of broader volumes. which are still not there. 26 points lower, 27 points lower is what we have on the Nifty, 17,157. So it's a very, very flat, non-committal kind of start. Maybe things pick up as we move through the day. Sonia.
Okay, so, since Bajaj is the biggest Nifty gainer, right, just thought would kind of get the brokerages up on board on what they're saying about Bajaj Auto. It's now up almost about 2% and a while back we told you about how most brokerages have their target prices which are anywhere between 4,000 to about 4,500. Goldman Sachs is the most bullish of the lot. They have a target price of 4,500 and UBS is in neutral with a target price of 4,000. So the list should come up for you. Of course, the numbers were good. There are raw material tailwinds as well, and things have picked up because of higher export realizations too for Bajaj Auto. And that's the reason why the stock is holding up in the green, up almost about 2%. The domestic motorcycle market share has also improved quite a bit for them to about 20.7%. That's the list of brokerages that I was talking about. Well above the current market price in terms of most target prices. But I think Manishi is back with us. Manishi, good morning. You were telling us about your view on the market when you got cut off. How are you feeling now at this juncture? What is the prognosis for the next, say, 6 to 12 months?
Okay. As I was about to tell you in reply to Prashant's question, that yes, the Fed is completely concentrated on domestic inflation, and that's likely to continue for some more time, which means that there would be aggressive rate hikes, possibly 75 basis points in November, another 75 in December, and our economists are forecasting yet another 75 basis points sometime during the first quarter of 2023. In this situation, and when you combine this with quantitative tightening that has begun in earnest, it's almost certain that the US dollar appreciation would continue. Developed market demand would continue to be destroyed, and that's not really good news for Asian or emerging markets. So continue to expect downside to the Asian markets, but at the same time, India may continue to be a relative outperformer in that scenario because investors are looking for some degree of growth assurance in the Asian markets. And the North Asian markets like Korea, Taiwan, or China being more linked to global demand don't exactly fit that bill. The domestic markets like India do.
Okay, all right. Hi, Manishi. The last time we chatted, you were telling us that there could be a time-wise correction for the Indian markets. Well, let's talk about the price-wise correction. We made a low earlier this year at around 15,100 odd. Will that level hold out?
I would think that, if you look at the near term, maybe over the next 1 quarter or so, there could be some price correction as well. Because while most other markets, again, especially the North Asian markets, valuations have corrected to less than 1 standard deviation of below their long-term means, India is kind of sticking around at close to the mean or maybe 1 standard deviation higher. So there is some valuation downside to this market. It may not be as severe as the other markets, particularly the North Asian markets, but there could still be some possibility of an actual price correction over the next 1 quarter or so.
Okay. Well, Manishi, it's festive season time and there's a lot of token buying that happens during Diwali, right? This time around, where do your preferences lie? Which are the sectors or even stocks you think that can outperform the markets over the next 12 to 18 months?
Yeah, our first preference in this regard would lie for the private banks. And this is a sector preference that we have had for a long time. We think the private banks are the best suited to cater to the upcoming CapEx cycle, which, it's difficult to lay a finger on exact timing of when it would commence, but possibly, sometime in the second half of next year, we should begin to see concrete signs. They're also better geared to benefit from urban consumption, which is clearly stronger than rural consumption in India today. So private banks clearly is the first big silo that we would play. Second, we are also positive on autos. It kind of squarely fits in to the theme that you just mentioned, festive season demand. And even over the longer term, we are now seeing both urban and upper middle class demand coming back, which obviously fits kind of fits well with the automobiles, particularly passenger cars and higher-end two-wheelers, or some of the SUVs. Those are the segments that we are now more focused on. Finally, we also, maybe to a lesser extent compared to the previous two sectors that I mentioned, we also like the IT services sector after it has declined so much, because the demand from the developed markets, which is flowing through into orders for the top-rung companies, that still remains strong, and that's the commentary we have received from the top-rung companies, IT service companies in India. And of course, the Rupee tailwind, I don't think has played out fully yet.
Okay, all right. Manishi, let me probe you a little bit on that IT point then. Is it going to be just large cap IT that you like, or some of these mid cap names as well you would look at?
You see, we are still focused on the large cap IT because we think that if we do see a downside to the demand, which potentially could still happen sometimes next year, then the large cap IT, which are more diversified, catering to more business segments, they would be the ones to withstand such potential demand downside. The large cap IT companies are also, in a way, rediscovering themselves. If you look at the kind of commentary that's coming through, it's really the frontline large cap IT service companies which are, they seem to be better placed as far as new order inflows are concerned.
All right, Manishi, it's a pleasure speaking to you. And in case we don't chat before Diwali, happy Diwali to you and your entire team at BNP Paribas. This one's a good one compared to what we've seen in the past. So things have definitely improved. All the best. Thanks a lot.
Thank you very much, and happy Diwali to your team and our viewers as well.
Thank you. Thanks, Manishi. Well, that's the word coming in from BNP Paribas. The market, by the way, is taking a turn for the worst now. So the Nifty is now down 70 points. Still, of course, well above the 200-day moving average, but 17,100 is holding for now. The mid-cap index is taking a bit of a beating this morning, so don't lose sight of that. And in terms of pockets, it is the metal space that's under pressure. JSW Steel, Tata Steel are your top losers now on the index. And even in the broader markets, there's plenty that's in the red at the moment. So the market is sort of getting very tricky right now, and bears are charging ahead. But Bajaj Auto is the only stock that's actually bucking the trend this morning, and that stock is up almost about, what, 2.5%? A good set of earnings, largely in line with estimates. The revenues increased around 16%. Margins have also expanded about 130 basis points compared to what we saw last year. The management, however, was a bit cautious on the call with respect to the domestic market. They're expecting a single-digit retail growth for the festive season. We have the management with us to tell us about the way forward. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Rakesh, good morning and thanks for being with us on the channel. The first question I have to you is on exports, because on the call you mentioned that Q3 would be better than Q2 in terms of exports. Can you safely say that the worst of the export pressure is behind you? And if yes, can you quantify for us what could the growth be? When can we expect to get back to this 200,000 unit export run rate?
Good morning, Sonia. Why the worst is over in exports is because in the previous quarter, we have brought our channel stocks, our distributor stocks in line with the retail. There are at least a month of or 2 months of stocks always on the water. And when the retails fall as dramatically as they did, particularly in Africa, the most important thing is to get the stocks in line and ensure that the exposure of our distributors is at manageable levels. So in the entire Q2, our exports were lower than the retails which we were experiencing in Africa. So July was a low point, and since then August retails were better than July, and September retails have been better than August. But so the worst is over from that point of view. But in terms of the volatility, in terms of the impact, inflation, devaluation, availability of dollars, those things are still continuing. I think it'll take probably another quarter for the availability of the US dollar for international trade to sort of settle in. And but going forward, yes, our exports will be better. simply because now we will not be trimming any stocks. They will be keeping pace with retails, which are improving gradually.
Okay, so you're saying that the worst in terms of export retails is now behind you, but there are still a lot of challenges on the horizon. I take that point entirely, but this time your export realizations were up as well. Higher dollar realizations is what you saw. I think there was a 23% year-on-year improvement in export realizations. Is there some more of a positive impact that you expect to flow through in the second half of the year? And would that help you in terms of blended margins as well?
Yes, the reason for the export realizations to be better is a combination of two things. Primarily, it's a mix effect because the largest geography of Africa, which is generally the lower priced models which go there, that weight for that reduced. But on the other hand, our sales in our business in LATAM and ASEAN, the penetration or the market share and the mix of our higher end brands like Pulsar and Dominar, that improved, and we are at all-time high of 21% of our portfolio being Pulsar and Dominar with very high market shares. So that was rolling on very, very nicely. So it's a combination of that. And I would say that that aspect of the business will continue because we are having very good traction. In fact, all our new models are just about to be shipped, and they're going to be making an entry into LATAM and ASEAN in the next 2 or 3 months. But in terms of how exactly it pans out, we'll have to see the overall mix effect of the different countries.
Hi, Mr. Sharma. Morning. Can we get a couple of numbers going then? Margins, clearly they're looking up. 5 to 6 quarter high, I think your margins have come in at around that 17% odd. Now, the supply side issues are getting sorted out. Input costs hopefully cool off. Volumes will pick up as well, as you're admitting. So what kind of a margin expansion can we look from here on? Could we factor in close to around 100 basis points, say by quarter 4 in comparison to quarter 2? And on the volume front, if exports, you have done that inventory correction, for the year, what do you think? Export decline of close to around 8 to 10%, would that be par for the course?
See, as you know, quarter 2 was a record smashing quarter for us. We have achieved our highest top line and our highest EBITDA in rupees crores ever. Of course, it was aided by, pipelining the stocks in the domestic market. But nevertheless, given all the stuff which was going around, it's a very, very delightful performance from our point of view. And going forward, our whole approach is to maintain both the top line and the bottom line and the profitability as we go forward. The demand in domestic is still muted. It is not negative, but it is very marginally positive during the festive. The export environment is volatile, and therefore we feel that if we are going to just match our quarter 2 performance in quarter 3, I think that would be a very, very good objective.
And on the margin front, sir, you said margins will be maintained at these levels, 17.5%?
Well, there is no certitude in today's environment.
But as things stand today,
it is our effort. I'm not saying that they will be maintained, but we are saying that, given everything that is coming together and the rhythm which we have, we should be able to, we will be trying to keep our quarter 2 top line and bottom line performance.
Mr. Sharma, hi, good morning. Prashant here. On the electrification bid, the Chetak two-wheeler, the expansion has been pushed out a little bit in terms of how many cities you plan to get to, by when. And last time we spoke, you said that the three-wheeler electric vehicle should be in the market by January. I think that's been pushed out a little bit as well.
The expansion actually is now in the on the Chetak side. The expansion is going to be accelerated because our supply chain visibility, which sort of became very cloudy in quarter 1 and to some extent in quarter 2, has improved substantially. So we are able to see what is the kind of flow we will have in the next couple of quarters, which allows us to now ask the network, the dealers, to commit to opening dealerships and putting in the infrastructure. So going forward, I see the same pace of growth which we saw between Q1 and Q2 to go on in Q3 and Q4. So hopefully, we should be in about 85 to 90 cities from the current 40 by the end of Q4.
But
now, when it comes to three-wheelers,
sure,
you are right, absolutely. The trials have got extended because as we are doing extensive trials along with the drivers of three-wheelers in a few locations across the country, we are wanting to get, their requirements are very stringent, and we are wanting to sort of adjust our product proposition to suit their requirements. In fact, to give you an idea, you know that the Delhi government has released 4,500 odd e-permits, but till date, even after 1 year, the performance is very, very low. People are not picking up electric three-wheelers at the pace. By now, we should have exhausted those permits, but they're not. Only 10 or 15% have got exhausted. And the reason for this rejection by the driver community is because the current three-wheel e-autos are not hitting the sweet spot.
Sure.
And therefore, we decided that instead of hurrying up and putting in a product which was not optimal, we will take probably another quarter to adjust the proposition and come back in, by the end of Q4, hopefully, on a commercial basis.
So earlier, I mean, there's been repeated delays, right, in terms of the timeline. Earlier, it was September 2022. Now it's March 23. You stick to that deadline, or do you think it could take some more time beyond March as well?
See, I would call these delays, This is engagement with the product is ready. This is engagement. I mean, we can put out the three-wheeler tomorrow. They're all running around. But what's the point of putting out a product which is not meeting the commercial requirements of in terms of the optima between the speed, the range, the loadability, how it climbs the flyovers? There are innumerable factors which have to be adjusted, and that is what we are doing. The electric format allows you to address these various parameters, and that is exactly what we are trying to do. And hopefully we should be able to do that, put renewed trials, and come through by end of Q4, like I said.
Okay, one final question then, Mr. Sharma. You said in your conference call that there'll be single-digit growth for the industry in this festive season in motorcycle sales. That seems to be a bit on a cautionary side, given that on a low base, the first half has seen, what, a 13% growth for you. So are you trying to say that for the full year, for the industry, we're staring at a single-digit growth, not just in the festive season? And what could the compounded growth be, say, over the next 1 to 2 years?
Well, you see, the industry, let's normalize the industry for the base effect in Q1, because last year was COVID and this year was not. But if you see, FY22 was a decline. Q1 on a normalized basis was a decline, and Q2 was a decline. But yes, in the festive, we have seen, from an industry point of view, a marginal growth, very low single digit. If you take the period from the start of the Navratri, the Dasharas, until Saturday, which is the numbers which I have. And this is a consequence of two almost distinct and opposite trends. What we are finding is that the entry-level motorcycles, which constitute almost 50% of the industry, they're having a strong double-digit decline. But the segment of 125cc plus 150cc's, the sporty bikes, etc., they are seeing nice growth. So as a combination, the industry is in a very, very marginal state. Because our focus of all our innovation and new products is in the 125cc plus segment, we are going much ahead of the industry in that segment, and hopefully even on an overall basis we will be outpacing, because we have been backing the segment which is at this point of time demonstrating growth in the industry.
Okay, all right, Mr. Sharma.
So yeah, from an annual point of view, there is nothing which is echoing back from the market, which is showing that, telling us that there will be a very strong end to the fiscal. In fact, I would watch November very, very closely, which is the aftermath of Diwali, to really understand that whether at a fundamental level, consumers are coming back to the purchasing cycle.
Well, you'll be watching it, and we'll be watching it with you, Mr. Sharma. We look forward to chatting up with you in the next couple of months. We get a better sense of how things are shaping up on ground. For the time being, the street likes what you had to say. And as we speak, the stock is up close to around 3%. But we'll slip into a short break. On the other side, we'll get chatting with Mr. H.M. Bangur, the chairman of Shree Cement, to discuss the past quarter's numbers and the way ahead. Well, we'll also be joined by Naveen Trivedi of HDFC Securities to discuss expectations from the consumer durable sector in this quarter. Stay with us.